Now, let me just tell you the secret as early as this. If you can learn the art of outsmarting your bank, or should I say to outshine your bank as far as your money is concerned, because I know right now you're watching this video, there is some money that you have it in your bank. Yes or no? You can just say it on the comment section. Now, today I'm going to show you exactly. You see, there's something I always tell you, and I want you to listen to this. And if you've never noted it down, note it today. Please don't ignore what I'm about to tell you. Listen. In every deal, as far as the finances are concerned, there is always a fool. And if you can't see any, you're the one. You need to be smart as far as your money is concerned. For God's sake, that is your hard-earned money, and you need that money to be doing something better for you. And before I continue on this video, let me just ask a very simple question. Have you ever showed up to your bank and you asked them, or even before you ask them, they told you, hey, you know what, would you mind if then you can just, fix your money in a fixed account and you can be earning interest instead of it just laying idle somewhere. So how about you go about and do that? Have you ever been approached by a bank and they told you that? Now, the question is this. I just need you to just reason, okay? Let's not have the emotions. Let's reason. Who is this that invites you to make money? Not even your brother can invite you to make money and be like, hey, hello, come over here, money is here, just come and make it. No, nobody invites you to make money. Number two, have you ever been approached, although there's a slight difference, but have you ever been approached by insurance company and they are forcing you, kinda, and they're telling you, hey, you know what, invest on this, get these insurance policies, invest on this, it's gonna make you money, and then disappear. And then told them, hey, you know what, after 2 days, I'm gonna think about it. Then they're calling you constantly. Have you ever asked yourself, if indeed I'm the one who is benefiting, why is so much pushing onto me? Why are they so much pushing it? Why do they want me to subscribe to that specific thing? What's the big deal? What's going on? And guess what? Today I'm going to share with you exactly what goes on in the world of the finances. And by the way, disclaimer, I love banks. Banks are better place, are amazing place. We cannot keep our money in our mattresses or under the mattresses. All what I'm saying on this video is to share with you what you're supposed to do so that you can outshine them or outsmart them and you can be able to benefit as much as also they are benefiting. All right? Let's get into the business. This is Good Joseph speaking. And by the way, don't forget, these videos of mine, I made them shorter, smaller, and also make sure that I share value out of it. Go ahead and subscribe. Make sure that you like the video and make sure that you leave me a comment on the comment section. Now, here we are. See, what is to outsmart? To outsmart is to simply be what? Be an individual who is on the beneficiary side. You're benefiting, all right? You're benefiting out of that money that you have in your bank. See, we all know that probably you have an account where you've kept your money and it's lying idle, it's doing nothing, it's making you nothing. And listen, one thing that you're supposed to understand, probably that bank that you have, okay? Go check this. Go ask them, okay? What opportunities they have for investments. Probably the bank that you have right now, they have what we call the MMF with them. That bank, they probably have MMF with them. Probably that bank is a PLC, meaning you can actually buy stocks of that bank. And by the way, sometimes I feel bad. You go and find a teller who works for the bank, and that bank is a PLC, and that teller or that employee in that particular bank, he or she has not bought shares of that particular bank. Now you wonder, surely you do that. That's the thing, you're an individual who borrows money from that particular bank and then you pay them interest, but your money is lying idle somewhere. Why don't you buy shares of that particular bank? When they are paying dividends, you're also earning dividends out of that share of that particular bank. And I'm going to use a very simple example, one way on how you can be able to outsmart your bank. For example, let's say your bank, it's a PLC. And your bank, it's a PLC, meaning it's a public listed company. That's what we call them here in Kenya, okay? Now, meaning you can buy shares or you can buy stocks based on how you call them. Now, this bank, you borrow money from this bank. This bank probably gives you at an interest of, in Kenya, we have an interest, crazy interest rate, by the way, all the way up to 19%. Let's say they actually lend you money at 19%. And the percentage yield of a share in that particular bank, you realize some banks even can go even up to 15%. Can you just imagine that? Yes, I know 15 and 19, obviously 19 is higher than 15, but it's far much better that if you had bought shares for this particular bank, you'll get 15% of what you've invested with that particular bank in terms of the stocks or the shares or the dividends at the end of the year. Mark you, they pay 2 times, but not all of them. We have the interim and then we have the end year stocks, and then you had borrowed by 19%. Basically, it's that they lend you that money at an interest of say 4% or something or sort. And bearing in mind, I've not brought in the factor of capital gain. Say you bought your shares at 30 shillings or 30, whatever the thing it is, can be birr, can be yen, can be whatever the thing you use, and maybe it's probably at 33. There is that increment of 3 shillings. This is what we call the capital gain. That is one way how you can outsmart your bank. You consider whether your bank is a PLC and how the bank is performing in terms of, obviously you must have considered before you even open a bank account with them, must be a bank that is actually performing, must be a bank that is actually promising, has a future, that is promising and what have you. So you go purchase the shares of that particular bank. Another way that you can be able to outsmart your bank is when you get into the deals with them. Did you know that you can actually you can have what you call the negotiation with the bank? You can just go there and negotiate for an interest rate. Well, I understand probably this one, it might be open for you if you have a substantive amount of money. You cannot go and negotiate with 100,000, 200,000, sometimes in a million, or maybe a million can actually be a little bit of a good amount of money that you can negotiate with the bank. That you can always go there and have what we call highly negotiated investment, or we can call it sort of a fixed deposit and something of sort. Now, what happens, because the normal fixed deposit that they're gonna give you does not give you a smart outcome. So what exactly can you do? You can actually go to a bank and ask them if there is an opportunities where you can be able to invest them. There are opportunities of bonds. Banks, they usually give you bonds. If you don't access the bonds, maybe let's say on the primary level or the primary market, that's when you go, you open an account with the Central Bank of Kenya, blah, 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 and all those kind of things. You can actually use a bank to nominate you to be able to invest in that particular bond, and you can be earning some cash without any complications and that kind of a thing. All right? Did you get that? Now, the other thing, or the other way how you can be able to outsmart your bank, is to actually ask for other satellite investments, likes of the MMF. It's quite fortunate or unfortunate that that bank that you usually bank with, they have an MMF, but they never tell you that, hey, you know what, just welcome, we have an MMF. They never share with you that. You can just go ahead and ask the presence of the presence of the MMFs, and they can be able to take you through what you can be able to invest on and how you can be able to make some cash out of that money that you have, instead of it lying idle out there. For example, if you go and get or use what they tell you, for example, hey, fix your money. The question is, you fix that money at an average interest of 6%. That's what the Kenyan banks give you. 6%, this is pre-tax, meaning it is before tax. This percent, once it's subjected to taxes, goes all the way up to 4% probably. And if they try as much, maybe 4.2, 4.3% thereabout. So 4 whatever percent. Right now with the inflation in Kenya, we are talking about 5.7. Again, depends on when you're watching this video. I'm making it on August of 2024. That's where we are playing around 5 to 7%. Definitely your money is actually not making you anything. You're still on what? On a negative percentage in terms of the money. So what you do is that, yeah, that fixed interest or the fixed deposit might sound good for you or to you, but the fact remains, well, again, it's far much better than just having your money idle in a bank. But then this is what I always tell people. If you're so much skeptical, if you're risk averted, if maybe you don't want to risk, you're this kind of an individual, you don't want to subject your money to risk, then you can just go ahead and ask for that fixed deposit, of which I do not encourage you to do that. But I'm saying, if you do not have any other option, if you fear investing, if you're this kind of an individual, you don't want to lose your money and all those kind of things, then you can go fix that money. Though you're earning less than what the inflation is, but at least it's far much better than just having it idle somewhere in a bank. And this is what I would advise, okay? This is another way how you can outsmart your bank. You can just take your money. Let's say you have like 2 million. You can, or even say less, a million, okay? Let's say you have yourself a million bob in that particular bank. So how about you take that a million bob? We call shilling here bob, just like the Americans call the US dollars. What they call them? The grand, whatever they think they call it, okay? Or the bills and whatever. Now, let's say you have like a million, okay? If you have a million in your bank, you can actually do this. Take this a million, go fix it. Again, sure, I understand. It is not earning you a big return, but fine, just go fix it, okay? You fix that money. Once you fix it with them, and then you borrow against that money. And of course, don't borrow a million. Just go borrow something like 400,000. This one, you don't need any guarantor. You don't need nothing. Just go borrow against your million, okay? Okay, I know what you're arguing. Hey, why should I even borrow 400 if I have a million? Let me show you how finance is. Let me show you how money works. You take this a million, go fix it. Let's say this a million is earning you 4%. Okay, let's even call 4%. 4%, and you fixed per year. What is 4% of 1 million? That's like 40,000. Yes. That is 40,000, 40K. Now, 30 40K, take this 400,000, you borrow this money, you take this money, you go invest. Once you go and invest this money, obviously, whatever you've invested, don't go buy properties that are not generating any cash flow. And this is what the mistake people do. You take this money and go buy a property, maybe a piece of land, a plot of land of 50 by 100 in a very weird place, remote places where you can't even do farming, you can't even do pottery, you can't even do nothing. The plot is 500 kilometers away from you. It is not even usable. We are not in 1960s and 70s. We are in 2024. And what you need is cash flow. Cash flow. Cash flow matters. Cash is king. That's what you need. Don't take this 400 and go buy a don't know funny plot somewhere. Take this 400. You'd rather even take this 400 and go fund a startup company or a startup business. You'd rather even buy this or get this money and go do what we call. You can even start. You can start selling animals. You can go buy cereals and transport them and sell them in wholesale. Don't even have yourself a fixed shop somewhere. You can take this money and go buy something like you can be able to liquidate. You get what I'm saying? You can even, or if you have a capacity of buying yourself, there's some places where you can buy a parcel of land. But if you have the capability of liquidating it within a snap of a finger, you can exactly do that. See now what happens. This a million shilling that is fixed is still earning you the 40,000. Okay, and the 40 that you're having, it's still bringing you the income. So therefore, you're gonna use the income that you're getting from the investment or the borrowed money, and then you pay this. And once you manage to pay this, guess what? You remain with a job or a work or a business that is worth 400,000, and you still have your 1 million, and the 40,000 is still coming in. You get what I'm saying? Instead of you taking the 400 from the 1 million, you make this million to 600. You fix this 600, gives you 6,000 or something of sort, and then after that, this. You get what I'm saying? So what happens is that you borrow against yourself. You don't need to fill in, I don't know, you have to front the guarantors and whatever. In case a BS happens, you can always be able to finance yourself back and be able to go back on your feet. You get what I'm saying? This is what people do. Get the money, you invest it, whatever you invested gives you cash flow, and the cash flow you get, you pay this. And in case a BS happens, get what you have actually invested is not paying it back, you get the 40,000 that you're getting from the fixed a million, and then how you brace yourself. And that is exactly how you do. And let me tell you one secret. For those who understand how the loans work, the moment you know there is a million somewhere and you know you don't have any problem, you actually have this. I came to realize one thing. When you are at ease, you are at ease. In case anything happens, you can be able to get back. You can be able to pay back this loan. What makes people actually develop the anxiety and depression is being in a state whereby you don't even know what will happen next. If you default this loan, things will go south and all those kind of things, especially when you do not have this capacity. So if you have the money, fix it, borrow against it, go invest your cash. And of course, you don't just invest anywhere, because Joseph said, no, invest areas where you understand you've actually done all the. But let me tell you one secret. Do not borrow the money, then find out what you can do with it. Find out what you can do with it. Then, after you've laid down all the strategies and systems, then go borrow that money. Then go actualize that. I had a client who called me and told me, hey, you know what, Joseph? I've borrowed 4 million. I wanted to do this and this and this, and I think things has gone south. What do I do? You don't do that. Borrow when you know you're ready to do something. Borrow when you know this is what I'm intending to do. And guess what? Just like I said, 14 minutes, boom, it's actually on the clock. That is the video that I wanted to share with you, and I hope you've gotten value out of it. And if you'd like me to make part 2, 3, 4, 5, whatever of this video, show me on the comment section. And by the way, don't forget, if you'd like to have a conversation with me, it's always on the description of this specific video. Get that number, shoot me a call, text. Let's talk business. For now, so goodbye. See you in the next one.